Welcome back. You're watching Business Morning on Channels Television. A conversation for today continues in light of recent developments on the domestic and global economic fronts, talking about recent devaluation of the Naira and the further tightening of some policies by the Monetary Policy Committee. And of course, we know that oil prices have been falling steadily since June. At the moment, oil prices dropped about 40% since June to date. And so we're looking at the capital market now, that's the Nigerian capital market, as a source of being a buffer at this particular point in time. I'm having this conversation this morning with the former president, Chartered Institute of Stockbrokers, Mr. Mike Itegbuje, and Mr. Boniface Okeze, who's the president, Progressive Shareholders Association. Good morning, gentlemen, and thank you so much for coming on the program.
Pleasure.
So, Mr. Itegbuje, let me start with you. In light of the developments on the global scene and very recently from home front, should the devaluation, for instance, now be looked at by investors as a buying opportunity or a warning to sell their equities at the market and maybe even stay away?
Okay, thank you very much for that question. Number one, it is imperative that we understand the dynamics of the market. There are majorly two categories of investors in any capital market. The first category are those investors who are actually there for the long term. And then there are others who are there just for the money, in which case they are speculators. They may be foreign portfolio investors, or they may be local investors who only speculate on price differentials in the market. For the speculators and foreign portfolio investors, well, this is to be a good time for them to offload. And so they want to take their gains, and often they do that, and they take the gains. Then when there's an improvement, they come back and buy, and then take more gains. But for the investor, the real investor, this is a good opportunity for many of them to buy the shares that they have always desired to buy, but felt they were too high in prices. So now that the prices have come down, this is a good opportunity to buy, and then buy large volumes. Because once this opportunity passes, they may not have it that easy again until a long time. So for those categories of people, this is a very great opportunity to enter the market and buy more of the shares. And for the speculators, because they borrow money, they don't want to stay too long in a market that is bearish. And so they will want to offload and get a pending when things improve.
So, Mr. Okeze, are we going to see more shareholders increase the amount of shares they have on the equities market?
Yeah, I think I agree with him in what he just said. It's good for retail investors. Retail investors are people who work for a long time and depend on dividend to earn their money. Dividend bonuses are accrued for them. If the price appreciates, they sell. They only sell when they're in the need. Maybe they want to pay the house rent, they want to buy houses, they want to pay school fees, or they want to travel, or they are sick. That's only see them when offloaded, selling the investments. They stay for a longer period of time. Knowing fully that those companies are doing very well, so they want how much dividend are going to declare, how much money they're going to pay for me. So they stay in there, and that's the people who make the market, and that's the people who our government should be looking at, protected. But unfortunately, they are people who bear the brunt in the capital market. For me, if we have the money and liquidity is there, no matter how volatile, this is time for you to take position where the equity is declining now.
But then, in all of this, how much has the capital market actually contributed to growth? Because we know that the market is supposed to actually play a major role in economic development. How much of that have we seen?
You see, people do not understand the fact that wealth creation is the basis of this market. It's something. A lot of the retail investors earn dividend, and those dividends help to keep them alive, help to keep them doing what they are doing now. You see, many of them put their savings in the market, and with those savings, they are able to do a lot of things that they normally will not do. Because if they didn't invest in the market, they will not make money. And once they make money, either in form of dividends or capital appreciation, they're able to do other things that help the economy to survive. You see, there was a time a president in this country said that he was surprised that the Nigerian economy had not collapsed. And why did the economy not collapse? Because of the millions of people, average Nigerians, who toil day and night and work, and they find themselves, you'll be surprised, market women invest in the market. Why? Because they believe in the market saves them a lot of headache, and then they create wealth in that process. But the economy as a whole cannot continue to survive on that ground. There has to be something more dynamic. For instance, if NNPC is a listed company, in this situation, every Nigerian who has a share in NNPC will want to know what is happening there. The Nigerians want to know why NNPC is not making profit if it doesn't make profit. But as it is now, nobody NNPC, okay, it's their own thing. And that is why the NNPC itself is not able to anybody. But the moment you list NNPC and its subsidiaries and the joint venture partners, where they also have shares, you see that the whole country will galvanize and be mobilized around these companies, and you begin to see a lot of differences. And then you will see the economy boom. Then you can now say that, look, the Nigerian Stock Exchange, the capitalization is over 100% of the GDP.
But then the situation we have on ground is these equities, these companies are all listed on the Nigerian Stock Exchange.
Well, they're not listed. And Nigeria should be asked, why can't we list this company? This is a good opportunity to ask those questions. Now, why can't we list them? Because federal government is going to look for money, right? Where is it going to get the money from? The market should have been in the right place. You see, if the joint ventures need money, all they do, they go abroad to borrow the money. The foreign partners go abroad to borrow the money. Where does the Nigerian NNPC borrow money from? Nowhere. But they can get the same money from the market. And that's why those other foreigners take us for a ride, because when it's time for them for Nigeria to bring his own share of money, he doesn't have the money to bring. And so they're right to go and borrow the money and then spend it on behalf of Nigeria, and we pay high cost for it. But if the NNPC can come to the market and say, we're going to raise funds from our Nigerian market, then they'll have funds to meet their demands, the aspect of the fund it.
But then how do we tie this in, because we know that the management of the Nigerian Stock Exchange is still trying to woo more international investors to come and list on the exchange. They're doing a roadshow right now in Asia. Yeah. So if we have this kind of situation coming up, and then we have foreign portfolios who seize the moment to make their money and then, go out, how are we going to tie it? How are we going to ensure that we don't constantly have capital flight?
That's what I'm telling you. You see, he said something. The real base of an economy is the local investors, not outsiders. The local Nigerian investors are the people who keep this market, because when it's good, the foreigners are here. When the storm sour, they run away. You leave who to manage the market? It's the same Nigerian foreign investors. So as far as I'm concerned, we need to develop and mobilize the Nigerian investors. We need to, I don't see why we cannot have 25 million Nigerians investing in this market in different forms. It could be in form of CIS, Collective Investment Scheme. We could do that so that you have various schemes that are over 500,000 schemes in this market will make a difference. You see, the PFAs are making a difference because they're in Nigeria. So if we have such collective investment schemes developed across the length and breadth of this country, they form the bulwark of a local domestic market. And when foreigners come or go, it doesn't really affect them badly. Who are the people making the U.S. market strong? It's the Americans. Yeah. So why Nigerians invest in Nigeria? Nigerians must say that this is our market and we must develop it, not foreigners. They can't develop it for us.